Let's also shift our focus to earnings, and we have Versha joining in with more details on Neuland Labs. It's in a focus on the back of its earnings, as I mentioned earlier. But let's take a look at what the key highlights were. Versha, what are you picking up?
Yeah, thank you so much for that. So Neuland Lab is actually under pressure. This is on the back of weak earnings that the company has posted. Let's see what are the key highlights. The significant drop in revenue that you're seeing is led by, drop in the revenue of their CMS segment, that is Custom Manufacturing Services segment, which was 34% to overall revenue this year versus 46% last year. Now, this is down mainly due to decline in the development segment. EBITDA margin impact that you are seeing is due to negative operating leverage, and after a year of consolidation with 5% year-on-year decline, top line growth is expected to accelerate in FY26 due to a lot of launches that the company has been doing. Now, the main reason, the growth driver for FY26 would be the global bempopic acid, which is an API, and why? Because this market or this product is expected to increase at a CAGR growth of 23% from FY25 to 23. Now, the market is expected to be driven by increasing cardiovascular disease and also growing demand for effective cholesterol management solutions, and launches and approvals of niche molecules in the specialty API segment is expected to drive the revenue, and EBITDA increase is expected from the more profitable CMS segment, which the company will see in FY26.
Okay, so that's with regards to where Neuland Laboratories stand. And Versha, thank you so much for giving us all those highlights. But stay with us, because other earnings are also in focus. There's Global Health, Vishnu Chem bought India as well. Just wanted to understand as to what's happened there and how has Q4 fared for these companies. Over to you, Versha.
Yes, so starting with Global Health, if I were to mention the key highlights for the company, the revenue growth that you are seeing is driven by increase in patient volumes. But ARPOB, that is average revenue per occupied bed, which is actually very important for any hospital company, grew marginally. It's like only 0.9% year on year. Now, the net profit impact, because if you see revenue was up 15% and net profit is down 20%, that impact is led by exceptional expense item of rupees 50 crore, and the higher tax also impacted overall net profit for the company. Next on the list is Vishnu Chemicals. If you see, revenue was up 31%, EBITDA was up only 0.8%, rather I would say flat EBITDA. Margins were at 16.3 versus 21%, but net profit growth of 40% that you are seeing is because of lower tax, which aided net profit, and the higher cost of raw material have actually impacted the EBITDA margin for the company. Next on the list is Abbott India. Overall, if you see good set of numbers, the revenue growth that you're seeing is driven by strong demand from its gastrointestinal and anti-infective medications, and the margin expansion that you're seeing is led by decrease in cost of raw materials.
All right, thank you so much for breaking that down for us, Versha. In fact, we're seeing that moves on the stock as well. Let's pull up Abbott India and see what it's doing in trade today, and Global Health as well. There you go, Abbott at its day's lowest point, but the stock did see a significant up move in early trade today. Global Health down by about 4.4% odd.